Okay, I'll start again. Okay, the market was coming down, right? This is the current high, and the market makes a low. This is the lowest part on this chart, right? And then when it comes and breaks this high, right, it has broken the market structure to the downside. So when it does this and makes a low that is higher than this low, now with high probability we are looking for buying opportunities because it has broken the market structure to the downside. The fact that it took out these highs and made a higher low, it means that it has broken the market structure to the downside. Any questions? Right?
So sorry, the way I'm understanding it is like you explained yesterday. So that was the resistance level, the market structure is broken.
Yes.
It broke it, came and tested it again.
Yes.
And then
Thank you very much. Very close to it. Yes. So the market was going up, came and broke the market structure to the upside. Right? So we've got a high on the chart already. And it comes and breaks this level right here. And then from there, it makes a higher low. Then we know with high probability, it's going to go down because it has broken the market structure to the upside.
And lower high.
Lower high. Yes, thank you for correction. It has made a lower high, now it has broken the market structure to the downside. Now we can expect trend continuation to the downside. That's why today, with high probability, we're still expecting the dollar strength. Okay. So, do we all agree that dollar is in an uptrend? Okay. So, under trending up, we write USD. Even though there's a couple of things that we should be focusing on USD as well. I'm actually going to open an NT4 chart now. Right, trending up. USD. Okay. Let's quickly open the. Don't worry about this, I'll open it on my side. The dollar. If we look at the dollar chart right now, let me actually go to the 4-hour and try to look at a better picture. Okay. Already it has broken the market structure to the upside, but still, we still have this level over here. On the dollar, right? We still have this level over here on the dollar as well. It might not be smooth sailing on the dollar today. The reason being, yes, it's going up, but it's going into problem areas or into previous selling areas. In this case, it's actually previous strong selling areas. Do you agree with me? Because if you look at this, right, the market pushed down here with momentum, the market pushed down here with momentum. So we know for a fact, right, without guessing, we know there were strong buyers here and there were strong buyers right on this level here. Okay, we know, we do not guess, right? Remember, we're relying on the price to tell us what to do. This is the joys of trading the price, because the price will tell you the honest truth of what you must do. So we know for a fact there was strong selling here and there was strong selling there. But there's something very interesting on this chart. If the dollar by any chance break these levels here, who can tell me where the dollar might go? Who can come and show me on the chart if the dollar breaks that level, where it might run to? Which level it might? Come show me, please. The more you do the practice, the more you get this. Eh? Guys, don't be afraid to come up. It's for your own benefit.
I understand.
Yes.
First resistance will be here at this level.
Yes.
And then the second.
Thank you very much. Spot on. Yes. Well done. Well done. Spot on. So you identify two most important levels here. Number one, here. Number two, here. There's something that I want you to notice today. As I said, that I'll try as much as I can to teach you a little bit of advanced price action. I want you to notice something here. Do you notice where I plotted my levels? Who can see where I plotted my levels? Is it up or down? Can you see this level? Is it up there or it's down here? Who can tell me the reason why? Who can guess? Please guess. You're allowed to guess. Why did I not put my line up then? Why did I put my line below? I want to teach you something cool today. Yes?
I think that's the level where the demand is high for you to buy.
Not really. You're close, but not really.
The price is coming from down towards that line. So you wanted to get this soon.
Not really. Right. It's simple. It's simple. If the price pushes down with momentum like this, right? The last trap was made on the previous green candle. So this was a trap, right? Because if you look at this candle right here, right, the trend was up. So everyone was looking at an uptrend, but immediately after this green candle, the market dropped. So where did the banks start selling? They did not sell on the red candle, they started selling on the green candle. Does that make sense? So the trap was made on the green candle, not the red. That's the reason why even on this level down here, I put it here, not there. Because this is where people in retail traders' mind. That's why I need you, if you study candle formation, please stop. There's a candle called bullish engulfing bar and bearish engulfing bar. Do you know that?
Yeah.
That is a trap candle. That candle, they use it to trap traders. Why? Because they know if people see bullish engulfing candle, what comes into your mind when you see a big red candle? Sir, you gave me a correct answer. And that's what the banks want you to think. You see a big bearish red candle, you want to sell. That's exactly what the banks want you to think, or the professional traders. That's why you see after big red candles, there's a reversal. Who knows candles called railroad tracks? Railroad tracks. Who's ever heard about those candles? One big candle going down, the next candle going up. That's a trend. Because they know fear and greed will kick in when you see a big red candle going down and you want to sell. But that's where they want to trap you. Because the moment it pushes down, the next candle pushes back up. Let me show you what a railroad track candle looks like. Railroad tracks. Right. Let's look at this candle right here before I even focus on the railroad tracks. Does everyone know that at this stage this candle was full and green? Very full and green at this stage here. Right? But where did the candle close? Down here. That was a trap. That was a clear trap because at some stage here it was a bullish engulfing bar in retail traders' mind. What you should know, guys, is a lot of things that are online, right? They are being published there for a reason, so that you can learn to trade the wrong way. I'm not even joking. A lot of things that are published online, all these candle formations are there so that you can learn to trade the wrong way, right? Because you have to learn to trade like a retail trader, not like a professional trader. That's why at this stage here, this candle was green, immediately reversed against you. So what a railroad track looks like, it looks like this. See this candle? Up, next candle down. That was a track. That's a railroad track. So it's two big candles opposing each other. See this candle? Right, this is a 4-hour chart. How many people were buying here? Lots, but look at the next candle. There was a reversal on the next candle. Because at this stage here, they push it up a little bit and dragged it back down. That's why it's never ever safe to buy a bullish or bearish engulfing buy. Here's a bearish. Can you see the next candle? Up. There is a strategy based on this. If you see the candle full, right, you do the opposite. If it's full green, you sell. If it's full red, you buy, because it's highly likely before it closes it's going to trap to the upside or trap to the downside. That's why the big candles, the next candle is usually the reverse against you. Yes, sir.
Then wait until the candle is closed before you make a
You actually wait until 10 minutes before the candle closes, or 5 minutes. If it's still shooting that direction, you need to start opposing it. But bear in mind, that is a trade that you should move stops to break even very fast. So at least if it reverses your favor, 10-15 pips, you pull your stops to break even, because if it's against the trend, it might go back against you. But most of the time, if you are right, you'll take it here. You find that you're risking only 30 pips, then it reverses your favor. That's why the big bearish candles, here's another example. Can you see it was full up there, but it went back down and the trend continued down. Here's another example. Look at this bearish engulfing bar. Do you understand this, guys? I know this stuff is a little bit controversial because it goes